Hi, everybody. I'm CJ Wilson with Josh Olszewicz, and we are the Bitcoin Bottom Line. We're coming to you pre-recorded in multiple locations around the country because that's how decentralized protocols work. And today we're talking to Dr. Doom, aka Mike Hobart. Mike has been an author for Bitcoin Magazine. He's written a bunch of articles recently, worked for a couple different companies. He is a seed oil disrespecter and a former member of America's military. So he's got some really interesting insights on Bitcoin, and he's one of the most real people I've met. Every time I get a chance to talk with Mike, I do, and I very much enjoy it. So, Mike, welcome to the show.
I appreciate it, man. I've actually been kind of itching to get back on here and chat with you anyway. It feels like it's a long time overdue. So it was like perfect timing with like all the events that have transpired. You just shot me a text at like 11 in the morning. It's like, hey, you want to do a podcast later? I'm like, yeah, sure, why not?
That's how podcasts. So that's how the podcast sausage is made. Everybody, if you want to start your own podcast, you just need to have a lot of people that listen to podcasts, and then you can make your own. That's pretty much kind of how that goes. But I think when we were talking earlier, Josh, the question is, I was just thinking like we could call this episode "Are We There Yet?" You know, there's been so much shaking and turmoil and bouncing and dips and like peaks and local highs and bad news and good news and whatever. It's just a lot. It's very disorienting right now in the general investing space. So open-ended question, are we there yet?
Yeah, I think the issue is all we're seeing is bad news. I can't think of a single good news thing anywhere other than like stablecoins on Lightning or something where the market's going to even care, because we have all these like custodial institutional announcements, which depending on how you feel about Bitcoin adoption is good or bad, but it's something, right? It says hearts and minds are changing. To think like 5 years ago we would have BNY Mellon or BlackRock or whoever like dealing with Bitcoin is like crazy. That's crazy. So we've definitely started to win in that regard, but at the same time, like we're connected to legacy markets, we're connected to the Fed, we're connected to rates. CPI just came in today, just as high as it was last month. So the rate hikes, quote unquote, aren't working effectively.
Mm-hmm. Who would have thunk it?
Yeah, I mean, there's this yin and yang. That's the interesting thing between these people who think like the Fed needs to go twice as far. I'm in that camp. Like, I'm like, look, historically, in order to tame inflation, you've got to match inflation, and we haven't done that with rates. Okay, and then there's this other camp that's like, well, they're doing too much too soon. They need to slow it down. It's like, no, they've already made their mistake by keeping it at zero forever. Okay, now they need to right the wrong. And yeah, it's going to be painful. So let's rip off the Band-Aid.
Right. Here's the thing. This is the problem with the majority of investors. And I would say the investor class broadly across America is considering themselves.
Careful.
Hey, you people. No, investors generally think of themselves as more educated, right? And they think that, hey, I've made some money, I've put it away. Now it's sort of safe because it's in these things, whether that's Apple shares or Bitcoin or whatever. And they feel like they have a sort of like a merit badge, right? Like, I'm an investor, I've achieved this thing, right?
A title for sure.
Yeah, they've got a title. And so the problem is they're always going to be upset if whatever policy's out there doesn't pump their bags. And that's really the problem, is the people that are saying, oh, they're hiking rates too much, too fast. They're just like, yo, my portfolio's bleeding right now. Can you stop? Exactly. Hey, can you guys stop stop raising, right? And so I don't take that criticism that they're giving out as genuine criticism. I think we have to look at the broad thing and say the dollar is really outperforming everything right now in a lot of ways. And once you get into these big macro trillion-dollar markets, like currency spreads with the euro, the pound, all this other stuff, those things influence the market a lot. And if those things are going to influence the market because you're going to have people piling in to certain assets that don't give a crap what Janet Yellen says or Jerome Powell does. They don't care. So they're just looking to save themselves. And if you get to the point where you're looking for a life raft, like policy in some ways is not going to affect your decision, because you're making a survival decision at that point. But the survival instinct kicks in when investors are down 10%. Right. So Bitcoiners are way more used to volatility. We're addicted to roller coaster rides or whatever, like the meme with the little coin going up and down. So I think we were like, hey, we told you guys this was going to happen. I guess, we might not be there yet where it's done, but the shaking is going to continue. until morale improves and adoption increases. That's my take.
Yeah, I'm curious what Mike has to say, because we're up 6% today on Bitcoin from the lows, which makes 0 sense to me. I'm happy, don't get me wrong, but at the same time, it's not congruent with everything that's going on right now. So yeah, Mike, any insight on any of that?
I gotta say that with regards to the narrative around the Federal Reserve, whether they're going to break something or not, like regardless of whether we go too fast or like just ratchet up to like really kind of hang on that cliff edge and just sit there for a while. I'm honestly of the camp that like something has to break. Like because the problem, like one of the biggest problems that we all talk about is like the S&P 500 is still at what, like it's down like somewhere between 20-30%, and we're still at like an average like 17 times earnings ratio as far as like the companies that are involved in it. So it's just like guys, like in what world, like as far as like economics and finance goes, in what world does that make sense? To where like these companies, like we're in a situation right now with just legacy equities and everybody's panicking, but we're still at such an over leveraged like position. Like and I'm not saying that all that leverage is going to get wiped out, because like probabilistically that doesn't make sense to me. Because like if that all got wiped out, like we'd be looking at some actual like Great Depressionary kind of stuff. But the way the Federal Reserve has been posturing for the last like 6 months, like I've been of the camp believing that they're intending to break something. Like they want to break something to the point of where it hits demand so hard and cripples the average American so much to where like it actually does suck all that demand out of the market, that they're trying to. Because like the funny thing is, I've been trying to have conversations with like more of like the FinTwit space on Twitter, like getting like involved in their spaces and everything. Like, yeah, my profile has like some like pro Bitcoin stuff, but I want to get into the, like actually understand how these guys think, because a lot of people are trying to compartmentalize aspects of the market. Like they're trying to say that it's just inflation that the Fed is trying to quell, or it's like they're trying to take care of like unemployment, or like the hilarity of the fact that the Federal Reserve, everybody calls it like a dual mandate when it's actually a triple mandate, because they say that they want to provide stable prices, they want to provide unemployment or control unemployment or maximum employment, like depending on the standard that you go by, and then they also want to what is it? Because it was price stability, employment, and then there's a third one. I can't remember what the third one is. But the whole point is that like everybody's trying to focus on literally just these two things, but the Fed's technically fighting like a multi-front war, because like they're trying to control demand, they're trying to control employment, they're trying to control like the valuations of the stock market, but they're also fighting a currency war between the euro dollar system across the pond. But they're also like trying to obliterate all the competitive fiat currencies in the market. So,
well, are they trying
like,
to, or do they? I mean, I'm sure they look at all this stuff. I haven't seen them comment
when all the currencies are floating against the U.S. dollar, they have to destroy them.
Right. Well,
like,
that's the fallout. Yeah.
When it comes to competition, they have to. Like if they want the U.S. dollar to remain a hegemonic power and global reserve currency status, they have to make sure that nobody de-seats them, right? Like as far as adversarial thinking goes in competition, like if you're king of the hill, you kind of have to defend your position.
But this is the way to think about it, though, and this is a fundamental question: is Jerome Powell on the same side of the table as Christine Lagarde, or on the opposite? At the opposite side of the table, right? And what I mean by that is, I think what people do is they oversimplify. And you brought this up, and this is a great point. It's very nuanced and it's multi-fronts, right? There's things happening all the time. Everything is correlated. All sorts of stuff are tied together. Josh said this as well. The financial markets, the macro agenda, all these things are tied. And so you move one input, and the outputs kind of like if you put in 5 units of input on one column, it might create 15 units of response, right? Because you're pushing something down, and then you're getting this like reflex leverage on the other side. This is what like George Soros has this whole thing about reflexivity, which is like trying to invest where when you push pressure on one thing, it's going to create an effect somewhere else. And you can kind of like, and he's obviously an evil mastermind, so he kind of sees what's going
Should
on
probably
here.
listen to him as far as like
He gets it, right? He gets it to a degree. So it's like we have to think the same way, like you said, adversarially. If the dollar is stronger than the euro, people will sell euros. People that are neutral, that are just doing it from a hedge, perspective, you might see $1 trillion of open interest on the currency markets on a daily basis or something like that. And if you have that big of a pile of futures and that type of stuff going on, if you depress one of those currencies, that money has to flow into something else. It's not like the dollar, the euro, and the pound can all trade up against each other. One of them is losing or two of them are losing, right? That's just the way it is. If you see one of them strengthening, like the dollar is up 20 or 30% in the last 12 or 24 months, and that's a result of having maybe the political stuff that we have going on, meaning a more predictable regime, not like mean tweets or whatever, because that's unpredictable and that scares people. So like money printer go burr, even if it's cranked up a little bit, we can deal with that if we know it's going to happen. So in an inflationary environment, everybody can manage. You can try to manage inflation if you know it's going to happen. So for decades, what they've been trying to do is tame inflation at a certain number, so that way they can kind of predict and then have this, the bonds and like the cycles and stuff like that sort of time into that yield that they need to chase, which is effectively 2% a year, or devaluation or debasement. But when you add all that money to the pile, and then Bank of Japan adds all that money, and England adds all that money, and IMF adds all that money, or ECB or whatever, now you have now it's just like you went from the bounce house with 4 people jumping in it to the bounce house with 4 people and like extra bouncy balls. Now there's bouncy balls everywhere. And so it just seems more complicated because there's more things happening, but there's only so many people at the lever, pulling and whatever that is, whether that's, raising interest rates, lowering interest rates, that type of stuff. But people are generally scared right now. I think the fear and greed thing has definitely swung back towards fear on pretty much every asset that I can think of.
You want to chart volatility, you should chart how hard the swings have been on the fear and greed index.
Yeah,
it's been just maximum back and forth.
Right. And so, and Josh could probably talk about this better than I can from a technical perspective, but once the volatility gets above a certain level, then you get this thing called gambler's ruin, where it's like someone can put $10 in and get $20 out, and you could do that a couple times, but you make one bad bet and then you lose all of it. And I think that's kind of what we're seeing in the markets right now is the people it's right now it's more of a survival thing than a profit thing, right, Josh? That's the better way of more companies are probably handling it right now.
Yeah, I mean, if you want to go risk on, you want a certain level of certainty, a certain level of insurance that things aren't going to blow up in your face, right? And the numbers we're seeing, like the VIX specifically, VIX, is in like the 80th percentile or quartile or whatever you want to call that historically. So people are rightfully, uncertain about what's going to happen. We have midterms coming up. We have a potential. They're talking about 100 basis point rate hike coming up in November. Like, I'll believe it when I see it, but that's on the table now. Especially that CPI isn't coming down, and arguably just won't come back down because it's not a demand issue; it's a supply issue. Like, that's another part of this conversation that a lot of people just don't understand. You can't print molecules. You can't write that wrong. If we don't have the energy demands or we don't have XYZ food demand to meet that need, then there's your inflation right there. Like what is the Fed raising interest rates going to have an effect on that? Eventually, when everything's at zero, sure, demand will be zero, right? But I wouldn't want their job, but at the same time, I think everybody knows what they need to do, and even they know what they need to do. But I think they're also afraid of breaking stuff. Another theme I saw this week is that the debt payments are reaching $1 trillion. I don't know if it's a quarter or
we're getting close to the point where meaning domestic in America, our American debt obligations are approaching to be the largest line item in the budget ahead of everything else. over everything else, which is crazy because once you get to that point, then you think of like the country itself is just turning into a degenerate, like post-college overspender.
Well,
You know,
it's
it's
a
like,
literal-
hey,
it's
well,
a-
I got to go to Miami and party, right? So like, yeah, but my credit cards are maxed out, but I got to find a way to do it. That's kind of how it feels like we're operating the country right now.
It's effectively putting the country into a zombie country status, because like for those that don't understand, debt obligations means payments on the insurance or on the interest. I'm sorry, payments on the interest as far as the debt goes. So like when we have companies that aren't even making enough money to pay off the interest of their debt, they're effectively a zombie company, which is 25% of the S&P. And we are fast approaching countrywide status of zombie country. Like something needs to break so we can fix this. Because like to the point that Josh is bringing up with regards to like inflation, if you want to bring inflation back down to 2%, and they claim it's at 8%, but then you look at what PepsiCo put out in the Wall Street Journal yesterday, and they've turned out a profit, but they've increased their prices to cover down the increase of cost for them, which is up by 17%. So you're going to tell me that PepsiCo, which is effectively used as a measuring stick or like a dipstick to represent like the average American economy, like they're seeing prices go up by 17%, but you're telling me that like CPI is only actually 8 that the average American is feeling? Like, go to hell. Like that's no. Not
Yeah,
even
but you know
close.
what? Social Security benefits are paid on CPI. So as CPI goes up, so there's like this thing I saw it. You know, it's like one of those articles that you're like, I can't believe somebody actually wrote this on purpose. And it says, hey, good news for those of you getting Social Security, you're going to get a historic increase in benefits next year of 8.5% or whatever because of CPI increases. And it's like, it literally doesn't benefit anybody to have prices go up. That's the problem. And it's like, if you're Pepsi and you're making record profits, let's say that record profit is $1 billion. Well, okay, what does $1 billion today buy you versus $1 billion 5 years ago, right? So if the money keeps devaluing,
40% less.
Right. If the money keeps devaluing, of course you're going to have record prices. Like that just doesn't mean anything, right? So that's where I think I want to say, like, I use the word globally, but I mean, like, you know, internationally, and also like from the top of the food chain to the bottom of the food chain, globally, everybody feels the pain of price increases, right? Everybody does. But there's enough benefits to government programs or federal elected officials or whatever that they're okay with that as a status quo, because they can point to that number, and they're like, oh, number goes up, like more people are in college now, there's like, yeah, there's more debt. It's like, yeah, but there's more people getting degrees. And it's like, oh, okay, are their earnings going up? Yeah, their earnings are going up. And it's like, yeah, but their taxes are going up too. Yeah, the taxes are going up. And so it's like they're looking at all these NGUs as good things, and we as Bitcoiners or hard money people or maximalists or investors or whatever, we're looking at it just a little bit like 10,000 foot.
We're looking at the margin.
Yeah, we're looking at the margin, the percentage, the rate of change. We're looking at those things saying, hey, this is getting a little ugly. You know, like I'm not getting as much as I used to for the same, you know, we're getting shrinkflation or something like that. So I just think what I like about what's happening now is there's so much more signal because so many more people are saying the same thing. They're getting this wave of like, wait, more inflation? Oh my God. Oh my, more interest rates? And they're seeing that there's a person responsible for this, which gets back into the Bitcoin mantra, which is a no rulers, just rules, right? We agree on the rules, we operate by the rules, and we don't need rulers. And because the rulers are the ones that mess things up. And I think that's where if we're sort of at that point where we could have, if we get the critical like phrase in people's heads, they'll realize that Bitcoin is the exit, right? Bitcoin is, there's no levers for Bitcoin. So that I think would help people sleep at night, because at least there's a fixed set of rules there. But Bitcoin's price being, you know, down 70% from the all-time high, that's what hurts people from adopting it. I think it's just this weird thing, but it's like we're almost there. It's like this thing that's like spinning off center. You know, Bitcoin's at 4/4, and then like the human mindset is at 3/4, and every like 12 notes it like lines up, and then it's like, oh, okay, wait, now we're on time. So we just need to catch people every time those chances to. And I think the frustration is like, that's where are we there yet? I think we're like almost there, that we can start capturing people with Bitcoin.
I think that we'll get a lot closer to after the energy companies, particularly Exxon, Chevron, ConocoPhillips, after they get a little more vocal. Maybe they won't get vocal, I don't know, but like I think that they should probably at some point get vocal about how they're using Bitcoin mining to help with their production numbers and to help with their bottom line and to help with their revenue. Because one thing that I'm sure you at least used to get more sick of, CJ, when you were partaking in the spaces more often, but I am definitely consistently sick of when I partake in these spaces, especially when I'm trying to chat with the FinTwit guys when Bitcoin comes up. Everybody is like either wants to treat it like a stock, like an equity, or like a heavy rock, like gold. But we all know that it's both those things and neither at the same time. And people just have a hard time understanding it. So there's just a lot of understanding that needs to really take root here, which has taken a while. Like, obviously, it's like Bitcoin's 13 years old and people don't understand it. But I think we're getting to that point now where, and I had mentioned this in one of the Swan Cafe Bitcoin spaces in the morning, that people don't really understand because people can't think, like they're unable or uneducated enough to like really kind of comprehend exponentials. Is like when we're talking about like markets or gains as far as working out or whatever, like when you're dealing with an increasing exponential number, the inputs that are like contributing to that increase in like exponential value are also like having an exponentially like increasing input or effect on that value, right? Because that's kind of like, that's the only way that works. So, and the reason I meant that, or the reason I said that, is we have so many people like myself and yourself, CJ, that are like putting out content like to help with the educational process. And like the more different voices that are putting out that information and that education, the more different like points of view that they can touch as far as like helping people gain understanding. And then the faster that adoption curve like starts to really go up. But like other than that, like, yeah, well, I don't like, we're almost there yet, but we're not there yet.
Yeah, I mean, Bitcoin's a chameleon. You know, it's whatever you want it to be for whenever you want it to be there. You know, like the Ukraine example, for them, it's a literal escape hatch. It's for you and I, maybe payments, investing. For them, maybe literal life savings, right? Even Russians who didn't agree with the Putin regime were using it to get out of that country. You know, and this is like, it's here if anybody wants it. No one had to onboard. No one had to ask permission. It's just functioning. It's reliable. Like,
and yet it's everybody's favorite punching bag.
Yeah,
like, it cracks me up to listen to these podcasts, these spaces where like it's almost consistently either the first or the third thing that everybody likes to just shit on when we're talking about the markets. I was in a spaces talking with Caleb Franzen and Emma Newman. I think that I've looked at her last name like 8 times to try and like make sure I pronounce it correctly. I never can.
I follow her. She's good.
She's a genius. But like I was chatting with all of them about like the macroeconomic situation and bonds and like oil and gas and energy and all this other stuff. And it's almost always the first, like everybody, I was having that conversation with them, and somebody brought up, they're like, how do you Bitcoin maxis, like, how do you guys seriously consider it money? And I'm like, dude, I'm not here to have this debate. Like, do we really want to like try and compare like Bitcoin being down like 60 to 70% when the same exact thing has happened in bonds, real estate, and equities? Like, you really want to like really try and pick that fight, because you're not going to win it. Like, everybody is selling right now. That's why the dollar is up 25 to 30%. Like, it's just, I personally love being like I love being the punching bag for the room, because I CJ, you know my background. Like, I grew up from that. Like, I was always the punching bag. It's like, I know how to take hits, man. I'll Captain America this shit. Let's go.
Yeah, I could do this all day. So I was just thinking while we while you were talking, the one thing that that I really like explaining to people, and you said it great, Mike. We do need new voices in Bitcoin, right? And Bitcoin itself doesn't need anybody, right? A lot of people are quick to point that out. Bitcoin, the network, doesn't need anybody, but people, humans, need Bitcoin, and other Bitcoin using humans need other Bitcoin using humans. That's like sort of how it works. Bitcoin, I think, is an octopus. You said it's a chameleon. The reason it's an octopus is because it's got 8 different arms that could suck you in with its tentacles. Okay,
and it can still change colors.
Yeah,
sure.
So it's perfect. We'll go laugh. We'll go with octopus.
So the Bitcoin octopus. Here we go. Number 1, uncensorable, right? Number 2, it's a fixed supply, and that's verifiable. You can look at all these different, mempools and stuff like that, and you can see exactly how many things are happening there. It's divisible. Bitcoin is divisible to the 100 millionth unit of Satoshis. It's secure transfer and payments. It's a great payment network. Obviously, there's lots of ways to do it. It's money for enemies or money for states that don't like each other. If I'm buying a good from somebody in Iran, I don't want their money. If I'm buying something from, somebody in Iraq, I don't want their money. I don't want the South African rand. I don't want the Brazilian real. I want Bitcoin. So that's something that I can buy something with. I can sell that Bitcoin. People can use Bitcoin as a transfer layer to then sell back into their native currency, kind of like what Strike does. Number 6, final settlement. It settles and that's it. There's no third-party clearinghouses. There's no credit card fees. There's none of that stuff. It's great. It's 2 people. I send you Bitcoin. You give me goods. We're done. Number 7, layer 2. It's got a scalable system, so you can build stuff on top of Bitcoin. You can use Bitcoin's strength and the sort of building blocks of layer 1 to build Lightning, to build Liquid, to build these other things, side chains, drive chains, whatever, all the way up as far as we want to go. You can build apps on top of it. People have Fountain and some of these other streaming apps. Number 8, which we just talked about, was rules, not rulers. Okay, we agree to the set of rules. We agree to 21 million. We agree to settlement. We agree to this stuff, and then we don't need some guy to be Bitcoin Jesus. We don't need some guy to be cat meme t-shirt guy to tell us what to do. We agree on upgrades based on the merit of the upgrades, and we upgrade our nodes and our mining equipment as time goes on because we are incentivized financially to be competitive. We're incentivized to be efficient. So I think that is the Bitcoin octopus. The reason I like the octopus is because, a lot of people, they get it from one way. I was a gold bug. For me, the fixed supply was the first thing that hooked me. Magic internet money, I was like, all right, whatever, right? You got RuneScape gold, you got fucking credits on Final Fantasy or something like that. It doesn't mean anything to me. But it's a fixed supply. That's cool. Gold doesn't have a fixed supply. It has, there's a certain amount of gold that's out there, but we don't know how much more gold there is below the surface. We don't know if we're going to capture an asteroid. So when I saw that, the gold bug in me was like, ooh, this is better than gold. This is better than shiny rock because this is divisible rock. And then so then the divisibility got me. I was like, oh my God, 100 million Satoshis in one Bitcoin. This is amazing. And so then you kind of so one arm gets you at first, and then the other arm gets you, and then it just yoinks you in, and then you get encircled by the whole Bitcoin octopus. Now I'm at the point where I've been in it long enough that I do understand the value of uncensorable transactions. Me being able to send money to a dissident in Hong Kong that's speaking up against the CCP, that's awesome. They're the Canadian truckers or whatever. Final settlement's great because it means that you can pay little amounts and get it done right away. Layer 2's awesome. The dollar has layer 2s. It's got credit cards. That's effectively the layer 2 of, so you need to have all these things. And basically, we are incentivized as Bitcoin users to build the architecture and the structure of a new monetary system ourselves because it benefits us to buy the Bitcoin, benefits us to design things on Bitcoin, to find other Bitcoin people, develop our own networks, and then escape the fiat contagion, which is what we're seeing right now. The thing we just really haven't figured out yet completely is how to do loans because most people have to buy stuff that they don't have all the assets to buy, and that's the biggest problem we have right now in the economy is lending creates this big towels in the washing machine kind of spin cycle effect, and you get everything asymmetrical because some people get lent more money than they need, some people get lent money at better rates, and it gives them outsized advantages. We haven't figured that one out yet, but to me that's the last component that will allow Bitcoin to eat the Bitcoin octopus to eat the rest of the fiat system.
And octopi, that's the plural, right? Aren't they? They could be alien, right? They could be completely alien animal that wasn't even born on this planet. So I really like that analogy.
Well,
Sure.
and one of the favorite parts about that whole list, CJ, for me is the final settlement, because really nobody, as far as like the normies, nobody knows about the settlement, like how long it takes for settlement with like the debt based and the credit based system. It's like, yeah, you paid for something like last week with your credit card, but it could settle anywhere from 30 to 90 days out. Like, and that whole time it can be clawed back, regardless of whether you want it to or not. Like people don't value that right now.
Right. Like as a vendor, I'm selling things, and if someone doesn't like what I sold them, or they just have a bug up their ass, they can actually just call their credit card company and do what I like to consider soft fraud, where they receive the good and then they cancel the payment afterwards. And so there's enough lag time, like arbitrage there, that people are doing that, and they've done that for years. And so that costs the credit card money, it costs the seller money, and that's just a shitty system. But I do really think that, like you said, the final settlement thing, it's a very commonly misconception. It's a common misconception. So for anybody listening to this, if you want to see a debate on this particular subject, George Selgin and Saifedean 3 years ago debated on this, and that was one of the topics. Was so if you look up, it's like the Soho Forum or something like that. But Selgin's like, oh yeah, I pay with my Visa, it settles right away, and Saif's like, actually it doesn't, and he says like, you don't even pay for it for 30 more days. How is it settled? Like you might receive something, but it's just a ledger system that these credit card companies have, but it's just going from credit card, like it's all like that fiat thing is just, it's like paper gold. It's not real. It's all just happening in this other sort of like channel. And as a result of that, a lot of people get burned because they think they have money they don't have. They spend money they don't have. And I thought that was really insightful. But yeah,
the fact that it's 2022, and like you said, like the credit card system is just a bunch of like compartmentalized, siloed different ledgers that are all like telling each other to update. It's 2022, and it's taken those entities 30 days to do that. Like for real, like you guys still want to use that system? Like people are talking about all the energy moralization with Bitcoin mining and like node operations and all this other stuff. It's like, let's talk about the moralization of that energy. Like, let's talk about how inefficient it is. All those people that are just taking that information, replugging it into a new system, that's a waste of energy that increases the likelihood of mistakes being made, which we're all human here. So that means we make mistakes all the time. And then like you just add into like paying for the offices that all those individuals are sitting in, or like that they're probably working from home. I don't know. Like all the different, like the amount of paper and ink and toner that gets wasted for all that paperwork that's getting, like all the energy that gets wasted on the air conditioning for those offices and those settings. Like, come on. Like there's so much ridiculousness that when it comes to like people that are opposing Bitcoin, it's just like, you can't not get mad.
But possession is 9/10 of the law. And right now, the credit card companies have possession over the payment rails of the world. That's the reality, right? The SWIFT network and the credit card networks transact the majority of the transactions. And until we have enough people critically using Bitcoin on a regular basis, getting paid in Bitcoin, that it's going to be hard. I argue with a lot of people, because some people will say that Bitcoin is lending towards, like, let's say some sort of anarchy or something like that. We need to promote democracy or something like that. But really what it comes down to is nobody can hold Bitcoin infinitely. Like they can't hold an infinite amount of Bitcoin for an infinite amount of time. At some point, if you are a Bitcoin maximalist, you will have to spend Bitcoin on stuff. And then that will, like a volcano, the value of Bitcoin goes up. And then as the value goes up, you have to buy things so that it gets redistributed to a wider base. So the more valuable Bitcoin is, the more people, therefore, can get paid little bits here and there, sats here and there, because then my one Bitcoin can split into more things. Like right now, if I took one Bitcoin and I spent that Bitcoin at just living life, getting, go to the gas station, get some barbecue, go to the grocery store, pay for dry cleaning, it would take me a really long time to spend one Bitcoin. Using like daily expenses. But if you think about that, if you have one Bitcoin and you did have to spend just Bitcoin until you ran out of that one Bitcoin, how many people would receive it along the way, right? 20, 30, 100? I mean, it depends on what you're buying and stuff like that, obviously, but it's like the smaller amounts that you're buying, the smaller amounts you're spending at a time. So it's like if you think about that, like your debit card or your credit card, you have a $20,000 credit card limit, a $10,000 credit card limit, a 5,000, whatever it is. If you had that same thing in Bitcoin and you were paying the same way that you use a credit card, it's $300 here, $50 there, $6 for parking, $12 for a movie, $5 for popcorn, blah blah blah. And so you can spend Bitcoin the same exact way you use a credit card. It's just the question is, how are you going to refill your Bitcoin? How are you going to get Bitcoin back? And I think that's that's where the payment rail thing and the settlement thing is such a crucial deal. And if we can get enough people using it, then people want to accept it. And if enough people want to accept it, then it's easier to use. But I think right now we're really stuck in this fiat contagion, because companies are, they have cash, they don't know how to account for Bitcoin on their balance sheet, and so they're like going to borrow money, and they borrow money, blah 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 blah. And so it's like this effect of ubiquity that people have with lending and credit is what's sort of, I would say, keeping the mass adoption and responsibility adoption of Bitcoin from going up.
Well, that and the fact that we're going through a liquidity crisis right now. So when it comes to lending, it's like banks don't even with all the different silos and buckets that they've got inflation overflowing into right now, like they still can't find enough money to to cover each other's expenses or whatever, or their debt obligations. It's just like, yeah, when it comes to Bitcoin lending, we're a ways out.
Something else I saw today that keeps bubbling up is like, we don't have time to go into everything, but this reverse repo thing and the fact that the Fed is now losing money on reverse repo because rates are so high. So like they're not, like if they were a business, the Fed itself would not be profitable based on rates. So it's just like they've backed themselves into a corner based on our own debt obligations, their own interest payments. Like it's a giant mess. And at the same time, like we've said,
and they're all calling Bitcoin a Ponzi scheme when their whole system is a Ponzi scheme that's built off of a Ponzi scheme that was made illegally on Christmas in 1913 with a secret meeting.
So we have 100 years. We have 100 years of Fed policy that has broken global markets a couple times in the last 100 years. When will we know that people are ready for Bitcoin? Is it a certain number, Josh? What is it for you? Is it like, is it a certain frustration that people are going to get? They're just going to be fed up with it at some point, and they're going to be fed up with the Fed. They're going to be, what would you say?
I think all this activity is opening people's eyes. Even like the PayPal thing that we haven't even talked about that happened this past week. It's like stuff like that slowly trickles into people's brain, and I think like, okay, is there a different system I can participate in? Right?
Yeah.
So I think all this stuff, as terrible as it is great for Bitcoin because it illustrates like there's this alternative system over here that doesn't require anything from anybody. It just exists. You're welcome to join, right? So that's great, right? And I think like you're saying, we need this closed loop of payments. Another thing that happened this week was Google Cloud announced that they would accept digital asset payments, which is great because then it allows developers to get paid in digital assets to then pay for services in digital assets. And it just like avoids the fiat scam altogether. And something else that just came through from Wall Street Journal in regards to like Bitcoin on the balance sheet, the financial accounting something board is discussing how to fair value digital assets versus, because
for years the accounting treatment has been you have to depreciate it like it's a computer, right? So it's like an asset that you have to take GAAP policy on.
Interesting.
So you have to take 20% haircuts on your valuation on it in your company, which really sucks. And then Josh, one thing also that I thought was really good was this is really weird because I don't normally give Coinbase like positive shout outs, but they just did this thing where they're now rating politicians based on where you live. So if you sign into Coinbase, they're like, hey, your state representatives are these people and your senators these people, and this is where they think about crypto assets.
That's great.
It's awesome.
They need to also like stay in their lane a little bit too. Like you guys are a corporation. Like, let's be easy with the politics here. Like, come on.
I mean, they're big enough, but at this point, like, we need somebody in our corner who's like you don't need to like persuade or give somebody a bias, but you need to give them the information like more readily available, just like
Fair,
Coinbase is doing.
fair.
Well,
I'll
and
concede to
then-
that.
Yeah, and that's kind of what I was saying. So it says, hey, these are the people. If you have a problem with your state, talk to these people. You know,
Yeah.
and I think that's the way the system is designed, and that's the way when a system is going to run the best. It's going to be more involvement on a personal level from more people because they'll actually know who to reach out to. You know, where's the complaint box?
It is also interesting though that like Brian Armstrong got a lot of flack during 2020 and 2021 for stating that the workplace should be sans politics. And he went and included this highly political like input for his app. It's like, okay, like you're trying to toe a very, very like narrow line. Like, let's see how you do here. Because we've seen how many different companies like Google, YouTube, which is basically Google, Facebook, Twitter, Instagram obviously falls under Facebook, PayPal, like all of these guys have been getting involved politically with their business dealings, and it's obviously screwing them over. So if Coinbase and Brian Armstrong find a way to do it without overstepping the line and stepping out of their lane, I mean that's a credit to them.
Well, just think in 25 years, we could be in a position where big crypto is the next version of big pharma, right? And influencing public policy.
It won't take that much.
Yeah, I mean, it could be way less than that, right? So we like skeptical people are looking at these corporations, whether it's an oil company, a tech company, whatever. They're in the news all the time, right? Because they're trying to break up big banks, the Occupy Wall Street, all this other stuff. There's been a lot of, let's say, wave, negative, positive, whatever, over the years, and a lot of attention paid towards corporate interests influencing politics. But I think we're at the point right now where the crypto people broadly are trying to get involved in politics, whether it's Sam Bankman-Fried or me with my lobby group or whatever. We're trying to go out there and either educate people or influence people to take a better stance on Bitcoin, specifically for me, or maybe broad crypto for Sam. But I think like it's back to that mass adoption thing. Like mass adoption is going to be McDonald's and Coca-Cola and Pepsi and Nike and stuff like that, and Google. That's what it is. It's not necessarily going to be just Valkyrie and Swan and Unchained Capital and Coinbase. Like those aren't going to be the only mass adoption channels, right? It's going to have to be the commerce is going to have to flow through regular channels or create new channels for regular business. That's what mass adoption looks like. So when people say they want mass adoption for Bitcoin, it's like, okay, well, buckle up. Here it is, And I'm very optimistic because, like Josh said, like some of these bad signals that people are getting from the traditional entrenched players, it's educating people. It's waking them up. Now they are doing their own research. They're verifying, not trusting. These are like great things.
Yeah.
And if more people did that, like I had somebody come into my office this morning. He's like, well, like this program is going to be good. Da 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 da. He's like a vendor. And I said, listen, sir, I don't trust anybody. So you can give me the information. I will independently verify if the laws and the tax statutes and stuff like that. Because it's like talking about tax accounting and stuff. And he's like, if you just do this way. I was like, before I agree to risk my business on this little clause that you're saying exists, I'm going to look it up and I'm going to talk to 2 CPAs to make sure that this doesn't put me at risk. Because like whether or not you survive an audit, it's more just like the brain damage from that, right? So
yeah, that's so anti-instant gratification thinking, man. Like, what are you doing? Like the U.S. isn't built like that, right?
CJ did not eat the marshmallow today. He looked at that marshmallow and he said, "No, I'm gonna wait."
I'll be back to see these marshmallows later.
Mike, I think we might have to leave it there. But do you have any parting words for us? Any stories you're working on? Anything interesting you're seeing bubbling up?
Stories, yes. There's like some bigger stuff I kind of want to work on. There's a couple books I want to write or just a big book. I don't know, but like I need to like get all my thoughts collected together and get everything planned out about what I would write about. But as far as parting thoughts, I will say this is that with regards to the macroeconomic situation, because I don't like with the three of us, I think we could, like, if we wanted to touch on all the topics we wanted to touch on today, it would probably take 3 hours, which I have no issues against. Like, if you guys ever want to do a 3-hour riff, just let me know. But one of the things I was talking with the FinTwit people last night about, that the whole market is like oh, this is like 2008 but worse. Everybody's looking at energy, oil, and gas because of the Nord Stream stuff in Ukraine. Everybody's looking at housing because of 2008. Everybody's looking at the supply and shipping constraints because of like COVID and all that stuff. But I honestly, like, I don't want to necessarily call it like a forecast or anything, but I'm thinking we're probably like the markets are going to get that like black swan or that sucker punch. I think it's going to come from the health sector because nobody's talking about it. So with regards to just like diabetes, both people like, so 10% of the population has diabetes, like is diagnosed with diabetes today. But then 97 million people, which would be over 10%, right? About 30%, almost 97 million people are pre-diabetic. So like when you add those two numbers together, that's about 40% of the US population is diabetic taking insulin, or they will be, right? Like you're obviously that some of that gets mixed up. That's not even talking about the percentage of population that has cardiovascular disease, heart disease, which is similar but not the same thing, obesity, morbid obesity, atherosclerosis, osteoporosis, all the different metabolic, like chronic metabolic syndromes. Nobody's talking, and like Greg Foss has mentioned this in many of his podcasts, like the US has like however many trillions of dollars in like medical obligations that are out there, like medical debt. I think he might have said 170 trillion, but I don't know if it could be that high. That's a boatload of money. Like even if it's 17 or like 1.7 trillion, that's a lot. That's a ton of money. And nobody's talking about like that debt that's going to like affect the economy, especially when we're talking about companies like Intel laying off 20% of their workforce, which they just announced the other night. So like everybody's looking at housing and all this other stuff. It's like, I wouldn't be surprised if it was some sort of health related company or insurance related company that blows up and starts to kick off all this nonsense.
So you're saying the Lehman Brothers of 2022, 2023 could be Kaiser Permanente or something like that, or some sort of, insurance provider that just takes a massive digger because their debt obligations are 100 times their revenue, and then they have literally people dying, and not enough medicine to provide for them, right? So it could be like a catastrophic domino effect of sick people that creates like a big flood of trouble. That's a really interesting space. That would be
sure seems like we're pretty well primed for that with how much of the population is unfit, not healthy.
So we'll call that the black lung event, not the black swan event.
All right, we could call it that, and then we can just harken back to this podcast if it happens.
Yeah. Wow. Dr. Doom in the house.
I know,
Mike.
Dr. Doom living up to the name here, keeping it very light at the end.
We didn't even get to touch on oil and gas or agriculture either, guys, and it is equally as bad in both of those angles.
Yeah, I mean, we'll have to have you back to talk about some more doomy stuff next time.
Let's do it.
Let's doom it.
Yeah, exactly.
All right. Well, Josh, I'm gonna have to go watch some happy cats on YouTube or something like that to get me off the couch now, because I'm a little bit waylaid.
You guys do that. I'm gonna go watch the margin call.
All right. All right. Once again, thank you everybody for joining us on the Bitcoin Bottom Line. Mike, if you could give us your Twitter handle so people can follow you on there.
Yeah, Twitter handle would be at the Mike Hobart. I have to spell it out because everybody kind of just assumes it's one E. It's THEE and then Mike MIKE Hobart HOBART.
All right, we'll be following you for the doomiest, gloomiest, just and life advice as well. Metabolic
dose of reality.
Dose of reality. Yeah.
Dose of reality.
That pill. Everybody, thank you for joining us on the Bitcoin Bottom Line. I'm CJ Wilson, and this is signing off for Josh Olszewicz. And we urge you to protect yourself on the open markets. And this is not financial advice, but don't ingest any seed oils today if you can avoid that.